and what is good about technicals, what is bad about technicals, or I would say only 10% make it to the end. So what separates winners from losers? Give the idea of what could work as a way of analyzing the market without fundamentals. And it was in the 1800s here. And tell you, hey, I'm gonna reverse. You better get into the market and make some profit. Hello, Elevation Trading Squad. Welcome back to another great episode with Elevation Trading. I'm very happy to be here and represent a great topic this week. Last week, if you remember, we discussed a very interesting and very important topic related to trading. If you haven't checked it yet, I highly suggest you go ahead and check that. But before we start today's subject, I have something very important to talk about because that's gonna have a direct connection to today's subject. I believe you remember last week we discussed trading fundamentals, didn't you? Okay, this week we're talking about trading technicals. So if you remember last week, we talked how important it is to know fundamentals, because fundamentals is what determines if you can buy or sell, simply if you can trade or not. But this week, we're gonna talk about technicals in general. We're gonna have more episodes coming in connection to trading technicals, but this week, we're gonna specifically introduce technicals in depth. What is technicals, and when it started, who started it, and what is good about technicals, what is bad about technicals, and how simply you can learn it. What are factors that determine a good technical analyzation and all those stuff. So bear with us till the end of the video. As I always as we discussed at the beginning, so first, before we jump into technical analysis, what are the factors that separate winners from losers in the market? As you can simply know, there are 90% of traders who usually fail. 90% of traders end up losing money. Only 10% make money. Or I would say only 10% make it to the end. So what separates winners from losers? Pay attention to these important points as we're moving more forward into the trading details. These will come in handy. First, and the most important one, is trading plan. So simply, winners has a trading plan. A trading plan is a set of rules that's predetermined by you as a trader on when to go and trade. If your trading plan is all applied into your trading, you would simply end up profiting from the market. But if you end up not following your trading plan as you planned it, then you will definitely end up being in the wrong side of the market. So always remember, plan your trade and execute the plan. Don't simply go and forget your plan. Always, if you want to be a part of the winners in the financial markets, you simply need to have a plan and execute it. Next, winners has a limit to their trading. There are times when you will start trading, you will start to lose one, you will lose another one, and you'll lose another one. So simply you would have a streak of losers instead of streak of winners. It's market. It could happen, even if you follow your trading plan. But what separates winners from losers is that winners have a limit. So for example, their plan says, if you lose $500 a day, stop trading. Then they follow that limit, and that's why they could make it to the end. And also, winners always work with stop loss. As a day trader or as a trader in general, you would simply need to have a stop loss on how much you're willing to lose from your overall capital. So these are the three important factors that always determine, or I would say separate, the ways between winners and losers. And what is the relation of these three with our today's topic? Well, in today's topic, we're going to talk about technical analysis. And in technical analysis, having a trading plan is very important, having a limit is very important, and working with stop loss is very important. So simply, what is technical analysis? That's my question always when we discuss about the subject. So simply, technical analysis is trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities. So simply, technical analysis are reading the charts, reading the data, reading what is available in front of you. There is a big difference between technical analysis and fundamental analysis. When we were talking about fundamental analysis, we would simply go deep into what's happening into the market, who's in charge of the about a stock or a company, who's in charge of the company, what's happening in the company, how is the situation of, how is the financial situation of the company, all those factors. But when we're technically looking at a market, simply we would work with the data, or I would say with the price action that's available there. There are a lot of things in technicals that you simply would look at, but in general, technical analysis are a set of discipline that you would simply go and look for in the market chart, or I would say in a stock chart. So technical analysis are simply the eyes of traders. Simply what they have access to is whatever they have access to is through technical analysis. Simply, whoever do technical analysis is called a technical analyzer or a technical analyst. And what is their job? Their job is simply to look at the graphs, to look at the data, the past data typically, and determine the future. That is what basically technical analyzers, or I would say technical analysts, do behind the scene. And usually, technical analysis will help us find our entry points and our exit points. What are they? We're going to talk about them in the future. But for now, just know that technical analysis are a set of disciplined actions taken by you as a trader. Now that you know what is technical analysis, then when technical analysis first were used and who started using them? Well, technical analysis are pretty old disciplines. They're pretty old theories, but they're still super helpful in determining when to enter the market. So simply, the very first time technical analysis were used was in 1800s, and it was established by Charles Dow. When were technical analysis first used? So, if you think that technical analysis are some techniques that recently established, that's not true. Technical analysis has been in the trading for a very long time. At the very beginning, people would only trade based on fundamentals. But Charles Dow, in late 1800s, established the principle of technical analysis. And the theory that we are going to use in technical analysis are mostly Dow theory. And they're based on reading the past data and basically determining what's going to happen in the future. We're going to talk more about how the Dow theory works in our upcoming videos. But for now, note that technical analysis were first used in late 1800s. And the establisher was no one but Charles Dow. And when Dow established this theory, what were the assumptions or what were things that he was looking at in charts. Well, Dow has a lot of assumptions. I would say a lot of rules for himself that still a lot of traders are using them. But there are three very important or three general assumptions in Dow theory that a lot of professional traders still believe in them and still follow them like very strongly with a strong belief that it's gonna work. It might not be the same all the time, but in general, it works. And what are those general assumptions? I mean, those three general assumptions in Dow theory by pro or professional traders. First, everything is priced in the market. Well, Dow believed that everything is priced in the market. Whatever is happening, or whatever the company is planning to do, or whatever related to a stock or future, they're all already priced into the market. Whenever you read a company's chart, technically, you would simply be able to read any sort of information that you need. And that's what a lot of professional traders still believe strongly, that everything is priced in the market. Next, price moves in trend. Very, very interesting theory by Dow, and that's that price moves in trend. Markets are trending, bearish or bullish, either ways. So the general assumption says that usually you would have a trend in the market and you would always look for that trend and always follow that trend. Anyway it's going, you simply ride the wave. And last but not least, history repeats itself. Well, Dow believed that history repeats itself. There are certain patterns that would keep repeating themselves in the market. But just so you know, they're all not the same all the time, but they could be similar. So Dow theory believed that history repeats itself. But and also general professional traders still strongly believe that markets, or I would say history in the markets, repeats itself. These are the three general assumptions in Dow theory that are still highly respected by professional traders, and they still use it in their daily tradings. All right, now that you know those important points, what are the most important factors in technical analysis? What are the most important things that determine that technical analysis would work? Do we have a lot of tools available in technical analysis? The answer is absolutely yes. So when you go into technical analysis, or if you want to analyze a market technically, you have a whole bunch of, I would say, tools that you could simply use in your favor and determine the correct direction of the market. And they can always help you. First, price action trends. Trends are your friend. Don't forget, my friend. Trends are always your friend. Follow them, don't go against them. So trends is one very important factor in technical analysis that you would always look for. It might be difficult at the beginning to determine what is the main trend of the market or how the market is trending, but with time and practice, you will master that. And until you master that, you might have difficulty reading the price actions or price charts. So one of the most important factors in technical analysis is price action trends. And you need to determine that. And how you determine that, we will teach you in our upcoming videos. Next, support and resistance. Key levels, or support levels and resistance levels, are very important or I would say very crucial in your trading results. When you go technically into a market or into a chart, you would always look for support and resistance level. Until you determine them, then follow the trend toward them, then you will basically start to become profitable. But if you wouldn't be able to determine where is support and where is resistance and how the market is trending, you'll have difficulty. And I'm here to teach you how to identify support and resistance and how to identify trends in the market. Stay tuned in our upcoming videos. Next, volume is another very helpful tool in technical analysis that you would always use. I mean, elevation trading team, all of them has that volume indicator in their charts. And volume indicator is super helpful in determining how the market is doing. Next, chart patterns. Chart patterns are very helpful tools in technical analysis. They will always help you identify reversal points in the market. There are times when the market will simply talk with you and tell you, hey, I'm going to reverse. You better get into the market and make some profit. Chart patterns are for that. And as we talked about the very last one, reversals. There are some chart patterns that would simply show you reversals. And we're going to talk about each and every subject in this list in our upcoming videos. Stay tuned. But for now, we're talking generally about technical analysis. And these are the most important factors in technical analysis. I hope that's clear. So as we have been talking throughout our videos from the very beginning, there are always pros and cons on whatever you're doing, especially when it comes to trading that you're playing with your money. So there are, of course, a lot of pros on when you do technical analysis, but there is always cons as well. The pros could be, for example, they're easy. Technical analysis is simple. It's a very simple language of analyzing the markets. And also, technical analysis don't need a lot of time. They wouldn't take a lot of time when you simply go and analyze a couple of charts. Doesn't take a lot of your time. But at the same time, so also you have a very big advantage. It could be a pro that history repeats itself. Then you would simply wait for certain times or certain levels of support and resistance, and you would get into trades. But there are some cons as well. And what it could be, like what could be the cons of technical analysis when it's so good? Well, does history repeat itself all the time? This is a question that a lot of people disbelieve when it comes to technical analysis. History doesn't repeat itself the same way. It might go very similar way, but it doesn't repeat itself in exactly the same as it was before. And also, sometimes there are people who would use some technical analysis indicators that they're lagging. So sometimes you might end up losing opportunities if you simply pay attention to technicals. There are times when there are news on the way, or there are rumors that are going around the markets, and if you wouldn't know about them and you only solely rely on technical analysis, you might end up losing that opportunity. But overall, there are more pros than cons when it comes to technical analysis. And last but not least on today's topic, how you can learn technical analysis. Well, simply, if you're here and watching this video, this is it. You could simply start reading books or start watching our videos. Well, a very easy way to learn technical analysis is if you will be coached by someone. So we're here to coach you. We're here making all the materials available for you for free. So simple as that. Just follow these basically educational material that we're providing you. At the same time, there are books that could help you speed up the process of your learning. And stay tuned for those books in our upcoming video. We're going to talk more about technical analysis, maybe trends, maybe price actions, and also I'll introduce a very famous and very good book that could help you speed up your learning process and overall technical analysis. Thank you very much, guys. I hope this was informational. If you have any questions, any suggestions, simply comment in the comment section and we'll get back to you as soon as we can. Don't forget to subscribe in our channel if it's your first time visiting, and also follow us in our social medias as we're updating the markets every day, every single day. Thank you very much. Until next time, peace.